Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's August 8th. This will be our chart lesson for the day, and really a very slow, very low volatility day. Not many trades today. Most of them are all shorts. I saw one iffy long here that we can discuss when we get to it, but just not much happening today, and it ends up being a downtrend, but we don't go very far. And really, the market ended up closed almost unchanged. We closed at around 21.76. We'll just call it, and you can see we closed at 21.77 on Friday. So um, we really closed unchanged, but the market moved down all morning for the most part. So started in the uh, latter half of the overnight session and continued down. So um, but let's back out and talk about the trades, and it won't take long today. First trade I saw was right here. Notice that we had a trend up. There's no real break of that, although this was, you could consider this a break out of the trading range, so a failure. But it does come back and test that breakout period. This was the high, so that's your breakout location. It does come back and test that a few times, so it's tempting to go long, but you got really from 3 o'clock to 2:30 in the morning till almost opening, it's been all downhill. There's not much volume there. There's not much volatility, but it's still all downhill. So really, you need to wait on a failure to the downside to give you some indication of whether you could go long. And you get that right here, but look what happens by the time it has. You've already got two legs up. You've got a 1, 2, 3, 4 test of that bar. You got to be real careful going long right there. So if you'd got another small bar way down here, I probably would have been more interested in that one. But I think that one's worth skipping just to see what happens. And it really just kind of goes sideways, and you finally get a little break. But by the time you get a break here, now it's looking like a trading range. And so there's no long again because it's right back into this resistance. And it comes up and it finds resistance there, and you get that little break higher, and you finally get a little bar at the high. And so it'll give you a chance to maybe get out before you get back down to these lows. So that's the only way to trade. Once it looks like a range like this, the only way to trade is to be able to get in near the highs or get in near the lows. You got another setup bar right here, but notice it never triggered. It just turns out to be a little downtrend. At this point, once we started going lower here, until we broke through here, you wouldn't really be looking for this, but I would have eventually looked for, there's your first leg down. So once we started heading down, I'd be looking for a measured leg. And you can see we didn't quite get that low before it pushed down, and then it actually overshot that in the end. So, but that generally is telling you that, hey, the market's weak and we may not bounce there. So, but it was pretty easy to find this channel. You had it just after the open, just draw that trend line, and you really could have tried it off these lows and pulled it up, and that would have helped you right here on this short as well. But notice it doesn't come back to the trend line until right here, so that's your first really good key entry point. Turns out to be a nice trade, but it comes a little bit later. This was a pretty good trade here too, but I'll explain that in a minute. But anyway, I like this one. Clear channel. It looked like it could be a two-tiered channel. You can see that this fits down here, but we never got out of the upper tier, so this just turned out to be an overshoot. So you just get rid of that, and this was really your channel. And first short was here, and you really had to wait till after the opening. So there's just nothing there. There's really nothing there. If you'd entered here, you probably just got chopped up, and you probably could have gotten out with a few ticks depending on where you entered. But this is the only one I see that's even half. And this one, I struggled with whether or not to make this one green, but I think there's enough information here to take this short. Just make sure you got enough room to get out before you get to these lows right in here. And so you probably couldn't use a stop there. Otherwise, it would have been real tight. You probably would have had to use a limit order. Um, it would have worked no matter what you used, but it's real close to being green just because there's not a lot of room. But really, even though you got a little bit of a double bottom here, your lows that you've definitely got to be concerned about are here. There's plenty of room there, but that concerns me right there. And a lot of times you'll bounce, and you see it did bounce, but it couldn't go higher, and then it turns back down. Um, I don't think it was worth entering right here, right into that low. But you probably got to guess that your target is the overnight lows, which is way down here. So it rockets down. You get those first two swings there. You get a close outside here, but it's real iffy. But you're so close to the low end here, you don't want to enter right here. It's close to that low as well. But then it pulls back, and you get that double test. It's a failed second entry long. Really, this was your signal bar right here. And it's bearish enough, but you might have waited on this one, and then when we broke lower, considered trying to get back in further. And you could have gotten in this trade all the way back up to probably a tick within this bar. But because it's a failed second entry long, I think you're better off just to go short right there. Or maybe let it break lower and drop a limit order in. Then you could have gotten filled all the way back up here to the high. And that kind of meets your, if this does turn out to be a range across here, which it could because we just had one, then it still meets the criteria, giving you enough room to get in before you get to those lows and getting in at the very high. This turns out to be a pretty good move. And notice there's a little inside bar here with a very bearish bar. I'm not so crazy about it because it's too close to that double bottom. But it was another test to try to go higher that makes it a lower high. So you might have considered entering there, but I think it's pretty aggressive. I think if you don't enter here, you just really have to skip it. And then we get that overshoot, which at this point, I'm thinking, hey, maybe this is just a midline, that maybe the other line was down here where I showed you a minute ago. But either way, we're probably going to, when it starts bouncing, you got to assume that we're probably headed to this line right here. And somebody actually made a comment about a pattern that looked very much like this. There's a shorter term pattern here, but you still have to be leery of these first two swings. And you see it did come back into play. So this is just a shorter term pattern within the bigger one. So that's why why going short here is a little bit iffy. Even though you got a pretty obvious little trend channel working up there, and you get a break, a move to a new high, and a big bearish bar, you still got to be worried about those first two swings. But more than anything, we didn't get back to the trend line, and we didn't really get back to up here either. So we don't know if this is over yet or not. So this is a little bit aggressive. And plus, notice those two matching lows right there. That's a little double bottom. And so notice how we found more support there. It did push on through. So in order to enter this one, in my opinion, you needed to be able to get in way up here. So unless you had a little bar way up here where you had enough room to get out before getting down to this line, I'd skip that trade. It wouldn't. Only way you could have got in on my chart was if you let it break below this one and dropped your limit order back a tick into this, and then you would have got, if you got filled, you would have gotten out. Otherwise, it probably would have been a 4-tick failure, although it never broke above that one, so you wouldn't have gotten stopped out. But I doubt I'm going to ride that all the way back up and hold on. I might, because when it's coming back up here, it does have to break above the trend line. But notice there was an overshoot, and that's another reason why you got to be leery of this one, is because we're not back to this trend line. But that's another key here. This can work both ways. Because we overshot it, sometimes you will undershoot it. And that's about the same distance it looks like. But more times than not, you'll usually get a break right there or soon thereafter. In this case, this was a fairly weak market, so we made another push down before we got a break. But that's a clue right there that a break of this trend line is coming soon. And so that's another reason to be leery about going short there. But when we get up here and touch that line and confirm it, because you only got two swings here, so this is the confirmation. Look how bearish. I like going short right there. Even though we still don't have a break of this bigger trend line, I still like going short right there. And you can see it took a minute to work through it. It comes back and it tests that underside and then goes down. But this would have been a nice trade. Uh, this one really would have been a pretty nice trade here. You'd have got a runner off it as well, maybe. Definitely would have had a runner off this and probably would have had a runner here. Um, but then we try to go long. You get another failed second entry long right there. I didn't like this one because we're going sideways and it's not a very good signal bar. It's real close to the lows, and this is the low of the day now, not the overnight low, but the low of the day. And we just had a double bottom there. So I was a little leery of this one, but when it tried to go higher again and fails, then I like it. That's a really bearish bar. So this is almost a repeat pattern. Notice that there's two legs down here and then two attempts to go higher. One leg, kind of a pullback second leg, and then two attempts to go higher. So this is just a smaller version of this pattern. It's a repeat pattern. So that was the reason I liked that going short there. You still had to be concerned about the low of the day here, but it is a trap. It is a repeat pattern. We are working lower, and at this point, I'm thinking, hey, we may still have a two-tiered channel, and we may get pushed through here and go all the way to the other one. This might be the trade of the day. It's a pretty good trade, and you would get a runner, but it bounces off the line, and it takes up the rest of the day. And really, you're so late in the day here. So, yeah, I like that short as well. But you had to be concerned about it not getting back to that line, just like you did here. But it's, like I said, it's like a repeat pattern here. It's almost a perfect repeat pattern. It's just a little smaller, and there are two clear swings there, but there's two swings here. There's one leg, a little correction, then a second leg, and then two attempts to go higher. One leg down, a correction, second leg, and then two attempts to go higher. And plus, we're in a downtrend, and you really got how many tests of that line there and a double bottom. So that's a good enough reason. Again, you got to be careful. If this was right into that low, maybe a little further down, I might have said skip it, but I felt pretty good about the repeat pattern and all. But I want to come back and talk about this because somebody made a comment on, I think it was Friday's chart. And we had this pattern in one spot, and then we had the same pattern in another spot, but the bigger picture was totally different. And so I want to explain that. I think it was, let me go see if I can. Actually, it was Thursday, because Thursday would have been the last chart lesson. I believe it was Thursday. If I can find it, I'm going to pause it just a minute. Okay, I think I found the situation. There was a bigger channel working up here. But by the time we got to this part of the day, you can see clearly we're swinging back and forth, both sides of the EMA, and that this is more of a trading range than it is anything. So you had to be real concerned with this resistance here, and really your support is there was really at this point your support would have been right across here, 2153.50. Notice how we've bounced there multiple times by this time. So that's what you would have been looking at, and really this one would have moved up by that time. But I want to keep it. It was right here at the point of this one. But notice this, how I drew this. I drew these two short. This one straight trend line. You got to close outside, move to a new high, and look how it turns down right off your resistance point and gives you a big bearish bar. And so I called that a short. And so this trader, this person was questioning, well, what's the difference of this moving down and you getting a break and a move to a new low? It's two legs down, and then you got a bullish bar right here. Well, even though those patterns look very similar, the context is very different. Here you're going short off the resistance. This is really, the short off the resistance is really the main call here. even though you do have a close outside and a new high. Plus, if you used your first two swings, which really this was the first break lower, there's your first two swings. You wouldn't have had that call yet, but you still got a break, and so it never really, this second channel never really came about. It's a possibility, but it never came about. But coming down, if you draw this one, you get the break and you get the new low, just like we got a break here and a new high, but we went right through the support. And we're coming back to test it right here. Notice how it closed underneath it. I think my chart looks slightly different as far as the candles, but it's still the same deal. So this is like if you'd have bounced above the support, yeah, maybe. But here you went right through it and you come back. And all that is you're pulling back to test these lows. And then it turns down again. But you still have to draw this off those main two swings. And this hadn't been discounted yet, where so that's one reason, but the real reason is the push through the support and the pull back and the retest. So even though those patterns look the same and the trend lines work very similar, they're not the same context in the big picture. And that's what I try to explain to people. This is not, we're not pattern traders, we're not trend line traders, we're price action traders. And you have to put all this together and you have to understand what's going on. And so, yeah, I can see why people like that long there, but it's not nearly as tempting, and it doesn't, and there's things to be worried about in the context of this one versus this one. This one, it looked like at this point we probably would go all the way the other side. Didn't happen, but it was an easy scalp. But I expected prices were probably coming down to test these lows down here, because really your support was down here then, and you can see that. We're going back and forth, and there's your EMA is just like a midline almost, and we're swinging back and forth. And really what this one turned out to be is there was probably a bigger channel here. And one thing you got to realize is that there's this is why price action works on every level, really, is because there's patterns within patterns. We really got to, at this point, really we're going sideways, but on the day there's a bigger trend line working up, and I think this bounced off that trend line too, so that was another that was another reason they liked that. But really, let me just draw it. I think it was like that, something like that. Yeah, but we did bounce off it here, but that was the only bounce. None of these others between here, so I must have had it a little bit lower like so. And see, none of those are touching up through here, and this was the first one to touch. That's exactly how it looked. And so by the time we get here looking at this bigger trend line, yeah, you want to be aware of that, but the last time we touched it was 8:30 in the morning, and here it is almost 2 o'clock, and we've never touched it again. We're just really going sideways here. So really, this is the more dominant pattern. So you wanted to be aware of that. The only reason I even marked this short right here is because it is a trap. I guarantee they trapped a lot of people long. And that's the whole idea, is to fool you and to trap you. So I hope you understand. I hope that makes sense why this pattern is slightly different than this pattern. Because even here, notice even if you're looking at waited for these first two swings, you wouldn't have had those yet. At this point, you would have only had those two swings, really. And it doesn't really change that pattern a whole lot. But that would have been your first two swings. And so that might have changed this one slightly. But really, I think this is the channel. You get the break, the new high, and then you had one moving down. You can see that one right through there. Fits real well on the bottom side. And you get a slight break outside, move to a new low, and then it goes higher. So looking at that like that, you might have decided to go long right there. It would have worked. This time your lows were more down here. Probably your most touches with your closes right along there. maybe even right there. But by the time we got over here, this had all moved up to right across there. And actually, I think on my previous chart, the closes were all right along there with the most touches. And so this was just a pullback to test that little double bottom breakout, and then it went lower. So that's another reason. That's a failed second entry long. I wouldn't have been looking for a short there, but when I saw the trap, I liked it, so I did mark it. But I would have been very leery about taking a long right there with that possible trend line working there and it being that late in the day. Because if you're wrong right here this late in the day, you don't have any time to make it up before 2 o'clock, and you may get stuck with it doing nothing. So yeah, I hope that makes sense. That those are, even though the pattern looks the same, they're flip-flop because this is a long, and you're taking a short off of it, and this is a move down, and you're taking a long off of it. So that's why this is slightly different, because this is like a breakout. So you'd have to go long here. You're really treating this like a failed break lower off that first one, but you still got that first two swings, and we're not anywhere close to being back to that yet. And it's so late in the day too. So that's another big thing. Where here, you went up and you came down right off. Look how many times we've tested that, and we've turned down every time. And that's what you're looking for, is a chance to get in up here near this high of this resistance, and it couldn't push through again. So anyway, I hope that's clear. I'm going to wrap it up. We're going to call it a day. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.